Hello again, this is Alex with MasterChartsTrading.com, and this is a market recap for Friday, October 27th, 2017. Briefly, of course, Elite membership list is forming. I'm going to do a quick, relatively quick comparison of the chart patterns during World War II and before World War II versus today, and we'll look at some of the stock funds. So Dow Jones, especially the South Korea and Spain currently. Stocks ignore overbought conditions and push to fresh highs. We'll look at junk bonds, TLT, dollar is pushing higher, and this is weighing on gold. West Texas breaks two fresh 2017 highs, and I'll discuss this in more details. Not really any good trend for natural gas, and copper pulls away from multi-year highs. Right, let's start. First, I wanted to do a little bit of historical reference for the chart. So first of all, this is Dow Jones Industrial Average on a weekly time frame. In other words, each candlestick is 1 week's worth of activity. And you can see that this is a chart that goes back to the 1940s. So the war actually broke out in 1939 with the invasion of Poland. But the really big deal happened here when Germany secretly, well, not so much secretly, but covertly invaded the Low Countries without, not really covertly, in a sense of they really fooled everybody, and they the Netherlands, the France, and the Belgium really were not prepared for such blatant attack. So this is what happened during the stock market, during the attack, and you can see that within 2 weeks of trading, stock market lost over 20%, and this have become 52-week lows. Actually, I think there's multi-year lows. We had a small rebound. This is a normal rebound. This rebound, if I was trading it back then, if I was alive back then and trading, I would be shorting this rebound right here, basically waiting for a move lower, which did occur. Especially, notice that very interesting that a break below the previous low coincided with a Pearl Harbor attack by the Japanese Navy on December 7th. And then we continued lower, and these are indeed multi-year lows. So this is kind of really pretty bad looking chart, and if you read some of the historical studies about the time, it was a pretty depressing time because allies were losing battles and rolling back, and Germany and Japan was expanding their influences. Now I do have a point to all of this, so bear with me. So in 1942, a Doolittle raid, and this is the time frame right there at the very bottom of the chart. So we have actually looked up, and apparently there was a a Wikipedia page about April 1942. So I looked up some of the information. Very interesting. I'm a sort of a history buff, especially World War II. So a Doolittle raid occurred, and Doolittle raid, if you know about it, basically it caused negligible damage to Japan, and this Doolittle raid occurred when United States planes bombed Tokyo, and this was simply, I think, to help raise American morale, and I think it did succeed in that. Again, we don't know exactly what happened back then, but the stock market did bottom about this area. Additionally, some of the other interesting events that occurred around that same time: 16-year-old Princess Elizabeth joined the military service, and apparently she was in the healthcare. Very interesting. I never knew about this, but I looked up some of the information, and this is very interesting information. And of course, at the very bottom, the Reichstag, the Germany German law, I guess, like a parliament, pretty much before the final dissolution of the Reichstag, they rubber stamped the absolute power for Hitler. But very interesting. I mean, if you can think about this, this event would be pretty much negative, but look what happened afterwards. The stock market went on a tear. From the low in 1942 to the high literally just a few months later of 56% gain on average for Dow Jones Industrial Average. And of course, you know, just titanic battles were unfolding back here on the Eastern Front. It was Russia, Soviet Union back then, and my grandparents actually also participated in World War II. But that's besides the point. So what happened later on, you know, the stock market continued higher. So these are all-time highs. Well, these are, I believe, all-time highs back then. And basically, I would be very interested, if I was trading back then, to go long only. I would not be interested to be short in it, especially about this area after the breakout. I promise I'll get to the point very quickly. Now, at the end of World War II, obviously a very positive event was the Victory in Europe Day on May 7th, 1945. Now, just a few weeks later, we had the atomic bombing of Hiroshima and Nagasaki, and it happened right there on August 6 and 9. Now, if I knew nothing about this chart, I would say that this is a very bullish chart because these were fresh highs back then. So I would be buying it back here. But if somebody told me that I would be buying a chart when a nuclear bomb went off, well, 2 nuclear bombs went off somewhere in the world, I would be, you know, kind of worried about it. But notice that actually the reaction of the bombing was positive, and you can see the stock market went higher. There's no question mark here. It's a dash. September 2nd, 1945. It's the end of World War II, and this is Victory in Japan Day. So the point I'm trying to make here is that the current stock market in 2017, and this is a current 2017 stock market from Friday 27th, notice that it looks very similar to this chart. It looks pretty much nothing like this chart. So if you have a doubt that this is a bullish chart, then just go back to World War II chart and see what happened here. Notice that after this really dramatic rally from the basically end of World War II until just a few weeks later, if we fast forward, we will see that actually, I mean, there was chopping back and forth, obviously, but the general gist, I mean, we had a pretty nasty drop here, but I would probably be looking to buy it. I would not be looking to short this chart back then. You know, we had I guess you can say a sideways consolidation with a fresh breakout. Can we see a similar pattern? Can we see a drop here and they move lower? Absolutely. And that's why I wanted to show some of the current charts. So currently we have tensions, well, we had tensions in Korea. Notice that we had nuclear tension in Korea, you know, just a few weeks ago, really. These were all-time highs for South Korea stock market back in July. And then we started having these nuclear tensions, and the market sold off, understandably so, because there was some fear. To my subscribers, I actually sent an alert, I believe I sent an alert, to actually look for buying opportunity in this area, and notice that finally we have more or less resolved this insanity, and we have moved to fresh highs. What this is showing me is that the market participants is voting with their money, saying that the likelihood of a nuclear war in North Korea has diminished. So what does that mean for current posture is that basically ignore the news. If you look on the news, yeah, sometimes they're useful. For example, here Germany invades France. That's pretty useful information. Yeah, you would be probably selling here. Pearl Harbor, sure. But I think a more important feature of this chart is the fact that this is a 52-week lows. And then we continue forward, and the 52-week lows have morphed and transformed into 52-week highs. And from here, this point on, we should be looking to buy, not to sell or to short. So the current crisis, I guess, is the Catalan referendum on independence, which occurred right here on October 1st, I believe. And it's still going back and forth, and there's some weird stuff going on. But can you imagine that we're comparing the news events of a Catalan independence versus a nuclear bomb going off on nuclear in North Korea, or in South Korea for that matter? I don't know. Do you see the difference between the two events? This is much smaller event than a possibility of a nuclear war. So to me, this looks like an opportunity, if anything. So Spain, to me, currently looks like an opportunity. I mean, it's possible it will collapse from here, but I think, you know, the dominant feature is the multi-year highs. Okay, let's move on to S&P 500. This is S&P 500 ETF SPY. Notice the dominant feature of this chart is all-time highs, and all-time highs on the advanced decline lines and advanced decline volume lines. Yes, it's overbought, but it is normal for bullish securities to be overbought. In fact, here is that same chart I keep showing. Here is a overbought condition with RSI indicator. Yeah, it's overbought. And what happened afterwards? We continued higher. Here again, we're overbought, and what's happening right now, I think we're continuing higher yet again. QQQ surprised many bears, I guess. If you're trying to look for a bearish pattern here, I'm not sure. I don't see a bearish pattern here yet. I see a bullish pattern of higher highs and higher lows, and this is a higher high, obviously. So far I don't see any major issues with this chart. IWM also fresh highs, and it sure as heck looks like a fallen flag. Maybe we'll see a breakout and fresh highs. Industrial sector, I'm not sure why I have it here, but it is fresh all-time highs. XLP, one of the weaker sectors out there right now. It looks like the leadership is possibly changing from the staples maybe to energy, if anything. I'm becoming more and more interested in energy currently. Yeah, energy looks better now than just a few months ago. So overall, I would advise new traders to, as much as possible, ignore the news. Of course, it's kind of good to have your ear to the ground so that you don't miss the beginning of World War III. But it's sort of an event that is very unlikely. It could happen, but with regards to trading the current stock market, I'm looking at only bullish opportunities. I just don't see any, support breaks or any bearish omens, so to speak. Junk bonds briefly on the weekly time frame. These are fresh highs here. So far so good. Junk bonds are confirming fresh highs for the stock market because of the correlation coefficient. They correlate, the junk bonds correlate strongly with the general stock market. TLT is under pressure. This is a Treasury Bond fund. So there's talk about raising of the interest rates. If the interest rates go up, this will weigh on bonds. We did break below recent lows. I am waiting very, I guess the word, attentively to see if the bonds break below this low here. In that case, we could have like a head and shoulder kind of business. Maybe this is left shoulder, head, and then right shoulder. If this is indeed a head and shoulder, I definitely want to be out of here. This is about 5% drop, so I don't want to find out how low it will go. Right now, there is still a possibility that we'll hold here, because I was worried that we're going to close below 3 weeks ago low, but we actually kind of stayed above it just barely. So I'm still somewhat hopeful on bonds, but if we take out, if we break especially below this low, I'm not sure it's a good sign. Okay, US dollar on a daily time frame. So looks like dollar bottomed out here and rallied. Whether or not this is a rally, true rally, or the one too short, remains to be seen. If I was trading US dollar, I would be shorting it, and I would be shorting it either now or a little higher. And you can get these indicators at MasterChartsTrading.com. This is a custom indicator for I can share this indicator with you. If you're interested, all I need is a user ID from you, and you subscribe to my service at MasterCharts Trading. It's only like $25, so it's not terribly expensive. So US dollar, I would probably be shorting it, maybe a little higher at around 95.5, 95.8 or so. Here's the weekly time frame of US dollar. There's some multi-year lows here and now a rebound. So there is resistance up here at around 96. I think we're going to see top in action here and then another leg lower from here. Vice versa, euro I think is bullish with a breakout. Yeah, now it's kind of sold off, especially last week was pretty hard selling. I think it's because of the break below this lows here, so there was a lot of stops executed. We may see further back and forth before a fresh high is put in. I think this is a bullish chart. US dollar versus Japanese yen, kind of indecisive. I would probably not be shorting it. I would be going long on this chart. Yeah, and we could break higher. Especially if we take out 114.49, we can break higher from here. So stronger dollar is weighing on gold. Right, let's look at gold. This is gold continuous contract on a daily time frame. So we have a breakout here, kind of like a W shape, and a breakout, and the 52-week highs. Now the dollar has strengthened, so we're pulling back, rallying, pulling back. It will depend on what the dollar does. I think gold is bullish, so I think you can do, you can short dollar or you can go long gold. That's also an option. GLD on a daily time frame, a little more choppy, but I think there's decent support here at 119. Really good support at around 115, I think, if we even get there. Here's gold on a weekly time frame. So that support would probably translate to around $1,200. GDX on a daily time frame broke below the swing low here at 2280. I think if gold goes higher, GDX will follow. As far as market breadth, not looking great. Huh. Look at this volume, advanced decline volume line. It broke below even May lows here. So actually this is a bearish divergence. Tough one, huh? And here's GDX on a weekly time frame. I thought this is a bullish engulfing here, confirmed bullish engulfing. Obviously, this was now negated. We could retest 21 bucks area. And if we don't hold there, that could be big trouble for gold. Okay, very briefly, let's go over West Texas Intermediate. Oil, if you're a beginner trader, avoid all commodities, including gold. That's my blanket statement. How about that? If you're a beginner trader, avoid all commodities because they're more choppy. All right, so West Texas Intermediate, this looked exactly like a shooting star candlestick, did not amount to much, and we pushed higher. And these are 2017 highs. So I don't have any positions. I had a position in SCO that I closed recently at no loss, very small gain, like 25, like half a percentage point or something. These are 2017 highs, and actually if you look on Brent, these are 52 and in fact now multi-year highs. So oil looks bullish right now, and West Texas could continue higher and catch up with Brent. Anything is possible. I was wrong. I thought I was going to short oil and I'm going to make a lot of money because I was thinking, since I shorted it here, it's at least going to get to 45 here maybe. Didn't get there, it went to 49. I was hoping for it to go to 42, but obviously I was wrong. So I'm staying out of oil market right now. No position is a position. Natural gas, look at this chop fest. Again, if you're a new trader, especially avoid natural gas. The daily just going nowhere, trading sideways. I'm avoiding it altogether. Again, trading sideways, going nowhere. Maybe eventually the trading range will be established. Maybe it has already been established. Maybe you could do an options trade, like breakout above $3.20 and they break down below $2.75. So you can do options play on that, but I don't know where this is going. So like I said, you can do an options, you can on a breakout or a breakdown. I don't do options. Copper, this one is a longer term chart. I wanted to show you this breakout and continuation higher, and I wanted to show you how to trade this with using my elite indicator. So here's copper, and here's that same breakout in 2016. Let me go back. This is 2016. This is actually a weekly time frame, but it doesn't matter. I am using daily time frame here. So here's that breakout in 2016. And using my indicators, and you can get this from me, just send me a request, and you need to sign up for at least a trial membership. So here's a breakout, and then you can start going long basically anywhere at the green or the blue line. Then we continue forward. You can see that this is a fresh high, so even if you went long at the green line, then we already have a profit there. This continues further. Notice that bottoms around the blue line and then finally breaks out. So if you bought around the blue line, it just continues higher. Here's one of the latest trades we did. We bought around the green line here and continue, and then we have a breakout. And now we have again a oversold condition. So if you're interested, send me an email at MasterChartsTrading. I also do a lot of teaching. So here is that trade alert services. You can click here at MasterChartsTrading.com. You can sign up, and right now we have, even though it says members only content, you also are getting a lot of elite service as well, because we're trading many more stocks. But currently the elite is free to you as long as you are a member. All right, thanks for watching and have another great trading week. Bye bye.